So you're looking at annuities for your retirement. And let's be honest, it can feel like you're trying to navigate a pretty complex maze. But what if you had a clear roadmap? Well, today we're going to break down the exact questions you need to ask about yourself, about the product, and about the company behind it, so you can find your way with total confidence. Let's get started.
First things first, let's set the stage for why this conversation is so important. This quote really gets to the heart of it. Retirement planning today looks nothing like the pension systems our parents or grandparents might have had. That old world of retirement, it's gone. And that changes everything for us.
And you can really see that shift right here. Back then, it was pretty straightforward. You worked for a company, you retired, and they provided a guaranteed pension. But now, we're in a do-it-yourself era. We're the ones responsible for building our own income systems from the ground up, piecing together savings, Social Security, and other financial tools like annuities to create our own security.
So where do we start this whole process? Well, it's not with product brochures or complicated interest rates. Nope. The journey has to start with you. We've got to build your personal roadmap before we even think about looking at a specific product.
Think about it for a second. What does your ideal retirement actually look like? Are you dreaming of traveling the world, or maybe just spending more time with the grandkids? Or is it finally time to get serious about that hobby you love? Because the clearer that vision is, the better you can figure out how much income you'll actually need to make it happen.
All right, next up, timing. Your retirement date completely changes the game. I mean, if you're 5 years away from retiring, you might be looking for an annuity that can grow for a bit. But if you're already retired or about to be, you're probably looking for an income stream that can start, well, right now.
Now, this next question, this one gets into one of the biggest and, frankly, scariest challenges in modern retirement: longevity risk. It sounds complicated, but it's simple. It's the risk of outliving your money. None of us have a crystal ball, of course, but facing this question head-on is absolutely crucial for your long-term security.
And to put that into perspective, just let this number sink in for a moment. 20 to 30 years. That's how long retirement can last these days. That is a long time to make your savings last. And it's precisely why having a source of income that you literally cannot outlive can be such a game changer. For most of us, Social Security is a great foundation, but it's probably not going to cover all the bills. That difference between what your guaranteed income covers and what your life actually costs, that's what we call the income gap. An annuity is a tool designed specifically to help bridge that gap with a steady, predictable paycheck.
And finally, you've got to ask yourself, how do you feel about risk? Are you at a point where you just want to protect your savings at all costs? Or are you still hawking for a little bit of growth? Some types of annuities actually try to give you the best of both worlds. They're linked to a market index, so you have the potential for growth, but they also protect your principal if the market goes down. Okay, so now that you've got your personal roadmap figured out, it's time to actually start looking at the tools. Let's dive into the next phase, asking the right questions about the annuity product itself.
You know, an annuity isn't just one thing. It can play a few different roles in your overall plan. For a lot of people, it's all about that guaranteed lifetime income. For others, it's a great way to let their money grow without paying taxes on it year after year. And for some, it's a safe haven, a way to protect their money from the ups and downs of the market. Knowing which job you needed to do is key.
Now, let's cut through some of the confusing jargon. You're going to hear terms like surrender charges. Those are basically fees if you take out too much money too soon. But you'll also see withdrawal provisions, which are rules that let you access some of your money each year penalty-free. And then there are rider fees, which are extra costs for add-on features, like a bigger income stream. The point is, you need to know exactly what you're paying for. And that brings us to, honestly, one of the most important questions you can possibly ask. You need to get a crystal clear picture of all the fees. This isn't just about finding the cheapest option, it's about understanding the value you're getting for those fees so you can make a true apples-to-apples comparison. A huge concern people have is my money locked up forever? And that's a fair question. While annuities are definitely long-term products, most of them have a lot of flexibility built right in. You can often take out a certain amount each year without any penalties, and many will give you full access if you have a medical emergency or need long-term care.
So you've asked about yourself and you've asked about the product. There's just one piece of the puzzle left, and it might be the most important. Asking about the people and the company that stand behind that contract. This is all about trust.
This statement right here says it all. You have to remember, an annuity is a promise to pay you an income, maybe for the rest of your life. And that promise is only as good, only as reliable as the company that's making it.
So how do you check on them? Well, it's actually a pretty straightforward three-step process. First, make sure you know exactly which insurance company you're dealing with. Second, look up their financial strength ratings from the big independent agencies. And third, just make sure they have a long, solid track record of keeping their promises.
And that brings us to the human element, the person sitting across the table from you. A great advisor isn't a salesperson. Their first job is to help you get clear on your own goals and your financial picture. Their focus should always be on you, not on a product.
We have covered a ton of ground, asking questions about you, the product, the provider, but it all really boils down to this one final, all-encompassing question. This is the big one.
This is it. An annuity should never exist in a vacuum. It's just one piece of your financial puzzle. A great advisor will show you exactly how this annuity works together with your Social Security, with your other investments, with your long-term goals. It has to be an integrated part of a complete strategy, not just something tacked on.
So at the end of the day, just remember this. When you ask these questions, you're not just shopping for a financial product. You're doing something much more powerful. You are actively designing and building your own retirement plan. You're taking control.